following content is an update and technical analysis on Palantir Technologies, a company of the technology sector and software infrastructure here off the hourly interval. Whereas I mentioned in my previous video on the 17th of June 2023, we were trading spot price $16.24, where we had these prolonged bearish, negative, and bearish divergences that had just continued to construct and establish really amongst all three technical momentum indicators, with now near-term exaggerated bearish divergences, with this minor uptrend line here coinciding with the 1601 price support. Watch for that level, call it gap, top of the gap support there at really at all cost, with the 50 hourly moving average, call it a triple line of an inflection point for any active and or day traders there. Watch for a solidly hourly candle close below and issuing that secondary sell signal right off that first initial sell signal that we had depicted a little bit before the 17th there, where we just have this consolidation phase, a nice counter snapback trend rally there, which again just only extended these negative and bearish divergences to grow even much more larger. And then we ultimately had the exaggerated bearish divergences there, with the oscillator histogram starting to have their red solid candle closes below their zero line thresholds there. And watch for that break of that sell signal, especially off that 1601 price support, whereas we had the 1455 382 fibs retracement there as well. Just another key inflection point to watch. I'll call it right off the gap support there as well. And then ultimately going and shooting down for that very secondary target, 1385 price support. And here's the update. And here we are, especially if you're an active and or quick day trader, to the very button, right off the open, right off the 1385 price support, where you could have had a nice clean day trade to the upside for a 2-hour nice clean 2-hour snapback counter trend rally for 4.3% in gains on the pocket in a single day. And the entire trade with us was good for 1624, and that was good for a 14.6% crash. And here we are, we're just hovering right above that 1385 price support, with the 200 hourly moving average hovering down below there. It was a pretty significant meltdown crash there, whereas we do have pretty extreme oversold conditions in the RSI now, with the potential bullish crossover here off the oscillator, where we have the oscillator histogram starting to peak above. So it was a nice defense, heavily defended there by bull traders and or long traders, and hopefully they're hoping for a double bottom right off that key inflection point of that support. I'll zoom out to the daily interval, and again bounce right off that key inflection point. Whereas I continue to mention this primary reactionary high downtrend line, really off the inflection point, off the massive rally off the IPO inception of Palantir, off the 2021 reactionary highs, multiple reactionary highs to strengthen validation of that primary downtrend line. And if we sink and break right through it, that would be a nice clean dollar cost averaging really amongst 1385. If this is the bottom there, anything is possible, where we could have a pretty large snapback rally. But we do have confirmed bearish crossovers here on the moving average convergence and oscillator, with a very strong red candle close. This drop was pretty significant in terms of the velocity of the move to the downside. We tend to get any more oversold conditions here in the RSI, it would potentially be a prolonged move down, especially if we snap that 1385. The fact that we completely bounced right off of it, just off that 4% rally off that day trade. If we snap that level, that's going to put an additional potential stronger move to the downside. We're again dollar cost averaging up in this range as well. I will also add to my position in the long term, whereas you have even stronger support here, coinciding with the 1247 price support and 50 exponential moving average. Call it a triple inflection point, especially if we have some sort of move where we can maybe bounce, have a consolidation phase, and then hit this key inflection point there. Well, you'll have it'll take about a week to get there, sometime in the middle of July, potentially beginning of July or the middle of July, hoping for that bounce above. Now, if we snap this level and we snap the 50 exponential moving average there, the 50-day moving average really needs to be defended pretty much really at all costs there. A move down to that would be my last extreme move down to the 1099 price support there, which correlates with the 236 fibs retracement. That is a level I do not want to see go, whereas a lot more technical damage could occur here in the momentum indicators, taking out the 236 fibs retracement. And usually a 236 fibs retracement breakdown can issue a stronger, an additional stronger wave of selling. whereas I'd want to see a nice, clean, healthy pullback for that next leg up. If not, the ultimate zone right there, the 236 fibs, and then a healthy, even healthier looking up, continued upward trend to the upside for a bounce. But as of now, we're dancing on this minor support level, and even stronger support at that 1247. For as the short sellers want to see a breakdown move below that 1247 price support for a prolonged move to the downside, ultimately taking out the 236 fibs retracement and putting in a moving average sell signal below the 50-day moving average there. And then ultimately what needs to hold is the 1003 and $9 support, which will correlate with the back to the hidden downtrend line. Talk about a complete retracement. Look really bad, technically speaking, again, for the technical momentum indicators. And we'll see what happens. I'll keep you updated if I see any more significance here in the charts.